Hello friends, I'm super excited to be with you again. My name is Clinton Ono to Market Salam. Don't forget you can call me Mr. Whatever. In today's lesson, I will explain what the term means market structure and the contextual nature of the market structure. I will show on the chart how you can easily identify market structure and use it to your benefit in your investing or trading journey. Without wasting much of our time, let's get straight into the business of today. Are we still here? Let's get started, shall we? Market structure. Market structure basically is the price action of the markets, the financial markets, so to say, and the assets you're trading. The term market structure, when used in other parlors, like in economics, it means different thing. When used in the financial market, there is a slight difference. And yes, is a Bitcoin chart, right? Bitcoin USD chart, a daily Bitcoin USD chart. And as you can see here, the markets, like every other market, makes either a series of higher highs, higher low, higher high, higher low, higher high, higher low, higher high, low, lower high, lower low, lower high, lower low, lower highs, low, and so on and so forth. Then the market takes a turn, makes another series of high, higher low, higher high, higher low, higher high, higher low, higher high, low. What we're basically saying is, when you say higher high, it means this is a high, right? This is a high, right? Of course, another high, right? Of course, another high, right? Of course, another high, right? This high, as you can see, is what? Higher than this high. This other high is higher than this previous high. Of course, this high is higher than the previous high. So the lows, right? This is the low, right? This is the low, right? This is the low. But they are higher lows because they are uptrending. It's higher lows. The lows are what? Getting higher. That is what it means. Now, you can agree with me that this low is higher than this low, right? This low is higher than this low, right? That's why it's making a series of higher highs and what? Higher lows. And we can refer to this movement as what? An upward or a, right? Then another instance, you have a series of what? A low, come on, low, 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 low. And you agree with me that this particular low, right? This low is what? Lower than this low. This low in question is lower than this low, right? This low in question is lower than this low, right? This low in question is lower than what? This low, right? This is the assumption here. And of course, this higher lows, right? Higher lows, right? This particular low is higher than this low, right? Of course, this low is higher than this low, right? This is a very basic, simple concept, but many misunderstand, and really understanding what this means, we do a lot good in helping you understand how to trade and how to move your investment, your portfolio in great profit. So that is that. Let me basically use the test to briefly analyze what I just drew on the chart. Eyes, right? H for eyes, right? I, right? Okay. And I is H. Okay. Sorry, let me use the previous one. I equals to H, right? Low equals to L, right? Then higher high, H, higher high equals to H, right? Higher low equals to HL, right? Right? Okay, I think it's better to put this in this order. Then we have lower low, lower high equals to LH, right? Lower low equals to LL, right? Let me quickly run through this. Equals to LL, right? So this is this. Let me draw on the chart. Wow, that just disappeared. Okay. Okay. I hope we can see this, right? High H, low L, higher I H, higher low HL, lower I LH, lower low LL, right? Let me note this on the chart. This is an obvious I because is the I we can see on this screen on the daily chart. Of course, there are other eyes there, but at this moment, this is the I we can see, right? And of course, if you have an I, you should have a higher low, right? Right? A low that is low, a low that is higher than the previous low, higher low, right? Then again, you have a higher high, right? Right? Then again, you have a higher low, right? Then again, you have another higher high, right? Right? Then again, you have another higher low, right? Then again, you have the highest on this, which is of course is the higher high on this particular chart and time frame, right? Then the market makes a turn, a a turn, a churn, or whatever. Okay, and the market start making a series of lows that different from the previous market structure that we previously analyzed, right? This is a lower high, right? Then you have a lower low, right? A low that is lower than the previous, right? Another higher low, right? Of course, this low is yes, lower highs, right? Then we have another low, as I can see here. Is it lower than the other one? I think they are in the same range, right? That's a topic for another day. A ranging conditions, right? Okay. And we have a mini lower high, right? Yeah, of course. It's a mini. Probably I will just okay, it's fine. Then we have the low on this chart. Low, right? Then the market churn. There's a churn in the market. I will sometime in the future I will explain further how to identify when the market churns. Of course, there are many ways you will understand and you will know the market is churning, and this churning is real. There's what we call the alert signal and the confirmation signal. That is the topic for another video. Of course, I will share with you all I know. I share with everybody. I'm passionate about sharing what I know with people. Please, if you find value in this video, use the subscribe button down below. Turn on the notification to be the first to get all and important information that will be pushed on this channel. I appreciate your time. Shall we? Okay. Then the market turns to start making another series of what? Right? Lower highs, right? Sorry. Sometimes I just interchange these words. But it's all fine as long as you know what you're doing. That's what matters, not the name, not the pronunciation, so to say. All right, higher highs, right? Then I think there's one mini. Come on, there's one mini higher, right? Yeah. Then we have the highest on this run, right? On this run, please don't misinterpret what I just said. The highest on this run, on this particular trending, right? No, this is the lowest on this run, right? But the market is currently on and active. So this is basically all you need to understand about market structure. When the market is making a series of higher highs, higher lows, lower highs, lower lows, then the market take a turn, making another series of higher highs. This is basically how price action moves. There is nothing else. There is simply no other way the market can move other than this structure that I just explained to you in a simple terms. All right, so there's really not nothing that is really difficult for us to spend more time here. Please, this is not a forecast. Of course, the market is expected to move to this region, but it's not a forecast, so don't don't assume and that is a forecast. That is just by the way. I really appreciate your time seeing this video. If you find value in this video, please, you know what to do. Use the subscribe button below to subscribe to this channel for more of this kind of tutorials and important information. Okay, that's just it. But before we go, I would like to share with you some uh some what I would call, or rather what they called, the Wall Street cheat sheet, right? Yeah, Wall Street cheat sheet. This is the Wall Street cheat sheet, the psychology of the market circle, or psychology of a market circle rather, the simplified market circle. And as you can see, this is the disbelief region, the accumulation region, where the markets usually start to accumulate before a rally. At this point, there is no belief. This rally will fail like others. That is the thought of every weak order, or rather every investor that have little or no knowledge about market cycle. Then it moved to a recovery stage where, okay, they some believe that a rally is possible. They have hope. Then it quickly move up to the optimism stage where they really believe is established. They believe that this rally is real. Then to a full belief, the investors, they are fully activated. They are fully activated at this stage. And market quickly moves to the true stage where a lot of people want to buy more. A lot of people want to buy on margin. Margin means they want to borrow to buy. You know, so many people will equally sell their assets, their cars, they mortgage their homes just to get rich overnight in this assumption. And it gets to a stage, the euphoria stage, where they believe that this is the best investment ever, this is the best asset ever. Wow, I'm a genius, we're all gonna be rich. This is the stage where they believe the Lamborghini dreams is just a day, week, or hour away, as the case may be. Then of course, the market takes a turn. For those who understand, at this stage, the institution and the smart money, they are distributing already. They started distributing from the true stage. Yeah, from this true stage, they started distributing up to the euphoria stage. And of course, the market takes a turn and gives up the complexity stage, where people believe that, of course, this is just a cool off, the rally is going to start again. Of course, we are going to go to the moon and all that. And to, of course, the market has already taken another direction to their the market gives them what they never really bargained for, and they hit the stage, the anxiety stage. They start asking the same question. Of course, they are really anxious about this whole investment, the asset they bought or whatever, and they're asking themselves, are they going to get margin call? Those who borrowed while they were treated, they're now asking themselves at this stage, are we going to get the margin call and all that? Then they throw them to the denial stage as the market keeps going down. They have themselves, but this investment is with great companies. I bought a good asset. Of course, this asset has the use case. The company is good. The management is, of course, and all that. Then they, of course, go to a panic state where they panic sell, some offload their portfolio and all that. Then you get a capitulation stage where, of course, there's zero selling. They sell almost everything they ever invested. Of course, at law, that is if you ever have to sell. yeah, that is if they have something left to sell at this stage, they will sell. But really, jokes apart, this is the time that you're supposed to be positioning yourself. You're supposed to be positioning yourself, so to say, to accumulate. Of course, this is a topic for another video. The accumulation, the distribution, how to identify them and all that. This is the topic for another video. Of course, I'm passionate about sharing everything I know to people, So if you find value in this video, please use the subscribe button down below to subscribe to the channel. Give a thumbs up to this video. Not forget, hit the notification bell so you'll be the first to get every of the information that will be pushed here. Then they get to the stage, the anger stage. They're already angry. What kind of market is it? I did this, I did it. Why did the government do this to us? Who is controlling the market? Why have they cheated us? Of course, this is a scam and all that, and the market starts giving up. Of course, we intelligent investors will start accumulating. All those who sold at this stage, they will start accumulating again, and this goes on and on and on, and it's going to go on forever. So sorry I'm saying this, but it's going to go on forever. There are going to be people who keep losing despite the information that we pushed across to on this channel, other channels, or every other tutorial platform, and this circle will keep on continuing. Even intelligent investors, they are trapped somehow with this market circle nature. So that is it. This is really what I want to share with you about this this structure. I hope you find value in this, and I hope to see you in other videos. Please give a thumbs up to this video, share with friends, family, neighbors, whoever. But don't forget, this video and all the information that has been shared so far is not a financial advice. I am not a financial advisor. Please and please do your own research. This is basically a lesson that I believe is valuable going forward in your investment journey or your trading journey. Thank you for your time. I hope to see you in the next video, or Mr. Whatever is signing off at this moment. Thank you.